The story of Novo Nordisk stock is really dramatic. For months, Novo Nordisk seemed unstoppable. The stock price soared, powered by extraordinary demand for its drugs Ozempic and Wegovy. Some analysts were calling it the NVIDIA of Europe, and they were saying Novo Nordisk valuation doesn't matter anymore, and the stock will keep going up no matter what.
Well, my impression as somebody who managed money for the longest time is that this is kind of almost like the NVIDIA of Europe. The fundamentals, the valuation of Novo, which is arguably expensive, is not a relevant factor, at least in the short to medium term.
Some other analysts were calling it the crown jewel of Europe, a company with a future so bright you need sunglasses. The analysts were raising their price targets left and right, and no price seemed to be unreasonable to pay for such a great, growing, dominant company. But in a stunning turn of events, that crown has slipped. The stock has crashed, plummeting by over 60% from its recent highs. The question now isn't how high the stock can go, but what in the world just happened. Now, the same analysts that were calling Novo Nordisk crown jewel of Europe are bashing the stock. Some of them thought the valuation doesn't matter at $150, but at $48, they think Novo Nordisk is no longer a buy. Some other are giving you warnings about thinking twice before buying the dip. And they downgrade the price target for Novo Nordisk day after day. In contrast to some of these analysts, I think valuation does matter, and that's why I didn't buy Novo Nordisk at $150, but now the stock looks interesting to me. In this video, I'm diving deep into Novo Nordisk and try to remove noise from the facts, the narrative from the data, and will also give you my fair value estimate of the company based on my discounted future earnings model. Let's start with a key question. What makes Novo Nordisk so valuable in the first place? The stock was doing okay before 2022 with their dominant insulin drug business, but what happened that we saw this huge surge in the share price? The answer is in two words, GLP-1 and semaglutides. So what is GLP-1? In short, it is a naturally occurring hormone produced in your body in response to eating. Its main function is to help regulate blood sugar levels and appetite. These natural actions of GLP-1 have been mimicked by a class of medications known as GLP-1 receptor agonists or semaglutides, which are used to treat conditions like type 2 diabetes and obesity. Novo Nordisk is undisputed king of GLP-1 receptor agonists and the first company that were able to commercially produce these semaglutides. You may know them as Ozempic and Wegovy. First it was Ozempic, and then Ozempic's powerful weight loss side effect led to creation of Wegovy, which was the first GLP-1 drug specifically designed for chronic weight management. The demand for these weight management drugs had been nothing short of explosive. These weren't just drugs, they were like cultural phenomena. Social media was buzzing about them. Celebrities were using them or advertised them. And the market for obesity treatments were projected to be worth hundreds of billions of dollars. This was a massive, untapped market, and Novo Nordisk had a dominant first-mover advantage. This success had significantly increased Novo Nordisk's market capitalization to unprecedented heights. It was not just a pharmaceutical leader anymore, it was the most valuable company in all of Europe. Its financial performance was stellar, with a robust profit margin and consistent growth. For many investors, this looked like a textbook example of high growth, high quality company. But what was the concern about the stock at the time? The first major concern was competition. While Novo Nordisk was leading the race, they were not alone. Their biggest rival, Eli Lilly, was hot on their heels with its own GLP-1 drugs, Mounjaro and Zepbound. The market was big enough for both of them, but a price war or a new, more effective drug from a competitor could seriously threaten Novo Nordisk's dominance. The second concern was the valuation. The stock has had an incredible run, and the stock was getting ahead of itself. The price to earnings ratio was in high 40s, something like 48, reflecting the market's sky-high expectations for the stock. If growth slowed down even slightly, or if the company faces a setback in its clinical trials, the stock could be in for a significant correction, And guess what? That's exactly what happened at the end. Let's review what happened initially. The stock was under pressure from two fronts. First, Eli Lilly competitor drugs performed better in trials. And second, due to low inventory, FDA approved compounding for GLP-1 drugs by third-party sellers like Hims. The widespread availability of compounded or unauthorized copycat versions of the drugs at significantly lower price tags started to impact sales of Wegovy, and then the company revised guidance to lower growth expectations for its key GLP-1 drugs in the United States and some other international markets. This was the initial shock, where the stock crashed around 45%. And that was because the valuation was exuberant at the time and they cut their growth prospects. This was the time that I personally started to look at Novo Nordisk and buy some shares of Novo Nordisk stock. Now let's address the big news that sent shockwaves through the market recently and caused the stock to crash again by over 20%. Recently, the company again drastically reduced outlook. In their latest news release, Novo Nordisk delivered a massive blow to investor confidence. They slashed their full-year guidance for 2025, revising their sales growth forecast from a robust 13 to 21% down to a much more modest of 8 to 14% growth. Operating profit growth was cut even more sharply. The company cited a few key reasons for this bad news: a slower than expected uptake of Wegovy in the United States and abroad, and intense competition from Eli Lilly, which is the first major problem of Novo Nordisk. This leads us to the other main problem of Novo, which is compounders. For months, Novo Nordisk has been in a legal battle against compounding pharmacies like Hims that have been producing their own versions of semaglutides, the active ingredient in Ozempic and Wegovy. While Novo Nordisk had been vocal about the dangers of these unapproved compounded drugs, they have clearly had an impact on the sales of the company. The company reduced outlook directly references the persistent use of compounded GLP-1s as a major drag on their sales. These compounded drugs, often sold at a fraction of the cost, have been eating into Novo Nordisk market share, especially in the United States. The company has filed numerous lawsuits and the FDA has issued warnings, but the compounded market remains a significant headwind for the company. Adding to the turbulence, the company announced a sudden change in leadership. Longtime CEO Lars Jørgensen was stepping down, and Magyar Mike Dustar will be taking the helm of the company. Dustar is a seasoned veteran of the company. He started as an office clerk with Novo Nordisk and then promoted to managerial positions, different ones. In the most recent position, he was leading the international operations of Novo Nordisk. A CEO change in the middle of a crisis is never a good look, and it raises questions about the company's future strategy and its ability to regain its footing. These uncertainties led to a significant sell down of the stock to an unprecedented levels. The stock is literally back to a level when they didn't even start to benefit from the growth of Wegovy. The stock is back then. This is what I call it overreaction, as the sales of Wegovy is still growing and the overall addressable market is expanding rapidly. Okay, so how the stock can regain its momentum? So Dustar, the new CEO, primary task is clear: restore the growth, fend off the competition, particularly from Eli Lilly, and of course, basically fight with compounders. Speaking of Eli Lilly, let's not forget their role in this story. While Novo Nordisk was dealing with its own challenges, all of these challenges that I mentioned, Eli Lilly has been aggressively gaining market share with Mounjaro and Zepbound. Head-to-head trials have shown Lilly's drugs may offer superior weight loss results. Basically, this is further intensifying the competitive pressure on Novo Nordisk. So what does this all mean? Is Novo Nordisk now a failed company, according to the analysts? Absolutely not. But is it the crown jewel it once appeared to be? Again, no. The stock crash has recalibrated the narrative. The market has moved from a pure euphoria to a strong uncertainty and doubt. The company's incredible growth was never going to be a straight line up from the start, and the recent development basically proved that point. The high valuation was built on assumptions of nearly flawless execution and minimal competition. Both of those assumptions have now been challenged. For potential investors, basically the environment has changed. The company is now trading at a much lower price and multiple, but the risks are more apparent. Can the new CEO successfully navigate the competitive landscape? Can they combat the threat from compounders and secure their market position? And more importantly, can they reignite the growth engine of the company? The days of Novo Nordisk as an undisputed champion are over, but the fight for the company has just begun. And for investors, the game has just gotten a lot more interesting, because the stock is trading at a very attractive valuation right now. And if they were able to get back to their previous growth trajectory, this can be a great opportunity for some investors. Now I think this is a pretty good time to look at the valuation of Novo Nordisk stock using my personal discounted future earnings model. To start building the model, I imported a series of general parameters from Novo Nordisk financial statements from stock analyzer tool of Yara IQ, like the current share price, their revenue, their number of shares, their net debt, which is their short-term and long-term liabilities minus their cash or cash equivalents, and their free cash flow per share. I also put my expected rate of return to be 12% for this stock. Now, in this model, I will calculate the fair value of the stock by projecting their future earnings and then discount the terminal value and future cash flows minus the liabilities of the company back into the present value of the stock based on 3 different scenarios. In the bear case, or the most negative case for the stock, the business will have a little bit of margin compression. I considered 0% share-based compensation and 0% share dilution, and I assume they are able to grow their revenue by 8% in the short term, 6.5% in the midterm, and eventually by only 5% in the long term, and I considered a terminal multiple of 12. These assumptions are even lower than the lowest guidance of the business for the next year, and the multiple is even lower than the current price multiple of the stock. For base case or normal case, I considered a little bit better margins in line with current earnings margin of the business, a normal revenue growth in line with company expectations and company management team guidelines, and a terminal multiple of 16, which is close to a more reasonable price multiple for Novo Nordisk. Finally, in the bull case or best possible outcome, I considered a little bit profit margin expansion, a 0% share dilution, 14% short-term, 12% midterm, and a 10% long-term growth, and a terminal multiple of 20. Even these assumptions are not unreasonable, and I think Novo Nordisk can hit these growth numbers easily if they execute the expansion plans of Wegovy and Ozempic better. Now, if I hit calculate, the software will give me some valuable information about the stock based on my assumptions. It gives you the intrinsic value of the stock in each scenario, and then it will provide you with a fair value estimate, which is $70 per share for Novo Nordisk, and comparing to the current share price of $48, Novo Nordisk trades at an almost 46% discount today. It is a buy according to the model. It means based on the current assumptions, which I would say it's really bearish to begin with, the Novo Nordisk stock is able to return more than 12% per year in the next 10 years. If you believe the assumptions I have here are realistic, which is what I believe, then the stock is a great buy at these levels. And that's exactly why I bought another 40 shares of Novo Nordisk yesterday and will continue to buy more shares of Novo Nordisk in the coming weeks. What do you think about this dramatic turn of events for Novo Nordisk stock? Are you buying the dip, or is this a sign to stay away from the stock? Let me know your thoughts in the comment section below, and don't forget to subscribe for more in-depth analysis. I see you guys in the next video. Farewell.